What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we'll be taking a peek over here at the Bitcoin price chart and the altcoin market, the XRP price chart. Looking over there at those altcoins that took a big hit this past week after the SEC went after Binance and Coinbase in a lawsuit claiming a bunch of them are securities. So not only will we talk about Bitcoin, we'll of course talk about XRP, Cardano, Cosmos, and Solana, but we'll talk about the impeccable timing of when this is also arriving, with where we are in the cryptocurrency market and how it feels like this catastrophic event happening with crypto, when the timing of it also aligns with the class of 2017 and 2018 when we were deep into 2020 and we had C19 hit, and how this was kind of our oh no moment that happened for crypto back in 2020. But while we're also dealing with our own world of volatility in the cryptocurrency market, we actually have big events happening in the macro world this week as well. On June 14th, the Federal Reserve is expected to come out with their rate hike decision. The Federal Reserve has been in a massive hiking cycle for the last year, where we've gone from essentially 0 up to over 5%, which of course has created a higher interest rate over there on Treasury bills, bonds, and notes. And currently, the market is pricing in that the Fed is finally going to pause on June 14th. So while we're dealing with our own volatility in the cryptocurrency market, it's anticipated that we're also going to be having volatility come from the broader markets as well. As tomorrow, we're supposed to be getting our CPI, or our Consumer Price Index figure for the month of May, in which it's anticipated to come in at 0.2% for May, which would drop the year over year from 4.9 to 4.1. Making it very clear that the trend is very down, very rapid, and has the Fed seen enough to go ahead and pause the hiking cycle. And like we've talked about many times on this channel, it is not cuts that are good for the market. These are usually signs of bad things coming, but these pause periods have historically been okay for markets. So big economic data there on June 13th in regards to CPI or inflation, followed by the Federal Reserve currently being priced in to be paused. That doesn't even touch on the fact that Bill Hinman, former director over at the SEC's emails are supposed to be released by June 13th, tomorrow. And while the list of news could go on and on, this week is anticipated to have a lot of events going on. The thing with Bitcoin, as we've been discussing for the last 2 months, has been an anticipation of a short squeeze followed by an ABC correction. We've been tracking this play-by-play on the YouTube channel and over here on Twitter, adding an update every couple of weeks as we just progressively went to the retrace levels, then broke back down through the supports, got to where we were supposed to be. And then as you see, the SEC comes out with a timed attack right down here to hit Binance, to hit Coinbase. We all know it. We have a liquidation event that happens over the weekend. All of this occurring back down here near these price levels that we've been watching for months, anticipating that we would eventually get to. The thing about Bitcoin that's interesting to me is not only had we measured out these spots, but one of the things we talked about too a lot was about how there was just an empty profile gap right here, volume profile gap, that we needed to have kind of a cruel summer and just kind of trade in this range for some time to close out that volume profile. For those who have been unfamiliar with this, with the volume profile, we've had a gap that has sat right in this area that is now starting to finally get closed out and worked out in here. And that it's really just been empty, and we haven't done much trading right here in this range. And you can see that if we head back over here to see that every time we've reached this level, we've kind of cut through it like butter to the upside and to the downside. There's been no real trading taking place in here. And now here we are, we're finally starting to close out that volume profile. It's been the anticipation of what we would be doing for this summer. And of course, for somebody who talks about magical unicorn fairy dust, puppet masters pulling the puppet strings, God, or a simulation, and how these charts tend to tell us narratives before they end up coming, that we can spend all this time in here and have our meme coin season happening in here, where we typically have them in these 702 retracement rallies before we head lower. And then we have just like a news narrative that just absolutely devastates the retail investor at this point as we get down to the support levels, making it to where it's scary to buy right now, right? I think we could all agree. Like, what do you do? Have you been eyeing some of these altcoins, and now the SEC has said, don't you dare touch them. They're down to prices that we like. Don't you dare go near them. Meanwhile, holding optimism up until this very moment, right? once we finally get here, now it's like, yeah, don't buy. But these corrections are nothing new from what we've seen before. And I remember them very clearly from 2020. If you guys remember, for a couple of months, I was sitting there saying, I'm going to be looking out to see if we see investors screaming manipulation, when we finally get a breakdown to happen. We didn't really see that actually end up happening, but you probably see a lot of people who are like frustrated that they probably got wrecked in these meme coins, right? And then what do we actually end up having? We have the SEC show up kind of at just the right time. But this has held up relatively well compared to what we typically see and how deep these usually go. And we've talked about that, how we had gotten through at least the capitulative action over here for Bitcoin already, and that we're just kind of anticipating some more waddling around sideways to end up happening. And that's usually what happens in these ABCs, just that we're not going as deep for Bitcoin. It was never anticipated that we would be going that deep for Bitcoin, but that this was the structure that we were playing out in here. And so as we're here at this point, from a time perspective, we're creeping along pretty okay. We've really got kind of the price action that we were thinking we'd end up getting here, where we would hold in here, have this little breakout of a short squeeze that eventually would just tumble over and head down to the lows once again. And then now just working out these lows down here. So as of today, we've now been down here for a week. Unknown how long we'll stay down here. If the past is any guide, likely at least through this week, it would seem. But again, guessing time, show me the magician who knows how to do it. I'll go on a 30-day fast and live in the jungle in just a pair of sandals, trying to apprentice on how to do it. Still haven't seen anybody capable of consistently predicting time. But if we use these as kind of a guide, well, hey, we might not be too far away. So, grand story of Bitcoin, still right in line with where it should be, with what the idea has been for the last couple of months. Nothing has changed here. Very possible the bottom is already in. As for XRP, still the major struggle here at the 786 Fibonacci retracement level as the SEC shows up just in time. Another one of those posts over there on Twitter saying, as the week nears its end, XRP has reached the very last fib retrace level. These levels are where the ultimate danger resides for a turn back down to the downside. Break through the fibs and things can get exciting pretty quickly. But the ultimate danger resided there, as the SEC must have been watching the charts at the same time, making their appearance known right there, and still the fight continues on a week later. Of course, this is where a lot of the anticipation is this week, as summary judgment is due to come up at any moment. We don't know when, but it's kind of been any moment for quite a while now in regards to the last couple of months. But tomorrow, June 13th, is when the Bill Hinman emails are supposed to be coming out. We've seen the SEC use every slimy delay tactic they possibly can. In this case, waiting till the last minute to pull some move off wouldn't surprise me. So for me personally, it's about, let's see if they actually end up getting released. But the anticipation is that they will be tomorrow. I just, in the back of my mind, have to remember they have somehow, some way, weaseled their way out for delay for years. And then I also have to remind myself that the emails are just that. They're emails. They're really just going to influence public opinion. Brad Garlinghouse, the CEO of Ripple, has said that the SEC wants you to think that it cares about disclosure, transparency, and clarity. Don't believe them. When the truth eventually comes out, the shamefulness of their behavior here will shock you, as Ripple has been in possession of these emails since October of last year, in which lead counsel Stuart Alderati had said that over 18 months and 6 court orders later, we finally have the Hinman documents, which are internal SEC emails and drafts of his infamous 2018 speech. While they remain confidential for now at the SEC's insistence, I can say that it was well worth the fight to get them. And again, as Brad says, the shamefulness of their behavior here will shock you. And while I believe that to probably be true, I don't see any reason why Stuart Alderati or Brad Garlinghouse would lie about that if we're eventually going to see these emails. But I do also have to kind of put into perception for myself, is this just going to cause a social media uproar, or is this going to impact the case? And I think the reality is the judge already saw these a long time ago. The judge has already gone through this, and whether or not they've made an impact on summary judgment. And it's summary judgment that ultimately is the deciding factor, right? As my wife tells me, all the cool kids call it, this will be some great tea. This will be some great gossip. And definitely after what the SEC did last week, this will do a really good job, hopefully painting the reality of the picture of the SEC. But I have no way to have expectations that it's going to impact anything currently today, tomorrow, next week, just by us reading the emails. So I just got to keep that in the back of my mind. Am I looking forward to reading them? You better believe it. But either way, from the timing of what the SEC has actually done this past week, not only into relation of where Bitcoin's price finally happens to get to after we spend months talking about it, but we finally get here. They continue their full-fledged war on crypto, going after Binance and Coinbase and then declaring a dozen or so crypto assets to be securities. But one thing I've been watching for the last couple of weeks has just been like thinking to myself, man, when we were this deep into all of this last time in 2018, 19, and 20, this is about the time where we had the C19 sell-off, where everything just kind of hit the fan. Everybody was scared. We'd been through this for so long. It was just one more final blow to the end to cause it just like, this thing's never coming back, to then, of course, turn all the way back up. But I wanted to give kind of a reference point for what that was like for those who were not here in 2018, 2019, and 2020 of where we are now, what's happening here, the narrative associated with it. When C19 happened, it was, this stuff's never coming back. Why would anybody ever buy this right now? People are losing their job. We just shot up to 20% unemployment in the United States. People are broke. Businesses are closed. We're all worried of our health. Why would anybody be buying crypto? And, people who weren't here look back on that moment and say, oh yeah, of course we should have bought there. The Fed was, cutting interest rates, but they weren't there. You can just tell when people weren't here in that moment, because I was making YouTube videos during that moment. And I was optimistic during that moment that we were going to recover, and this was the beginning of the big run. But the pessimism of the market was certainly there at that time. And I've been through many moments in crypto where we have that is crypto dead moment, where the narrative is so bad, the price action is so bad. It's that, holy cow, is this the end? I remember feeling that way even midway through the 2017 bull run. Back in July of 2017, when Bitcoin had crashed from like $3,000 down to $1,800, feeling that way. I definitely remember it at the bottom of the 2018 bear market. I remember it during C19. And it certainly had those feelings during the Luna crash and the Luna collapse of UST. And then watching FTX follow that up and go to zero right after that. Those all have those same kind of feelings to it. And then now here we are with another one with the SEC coming in trying to absolutely destroy everything. But I have to remember to myself, this is a department that has been unethical. And for a lot of people in the crypto market, they haven't focused on that for the last 2.5 years. But those who have been heavily engraved in the XRP community, this has just been a way of life for 2.5 years. We've been screaming from the rooftops that this is the case of what's happening here with the SEC. While for the rest of the market, it's been kind of like, not my problem. It's not happening to me, so it's not my problem. I don't have to worry about it. Now everybody has to kind of worry about it. Now they're kind of worried because they're like, dang, we saw what Ripple went through. We saw what the XRP community went through. We just kind of ignored them. Now you've got Charles Hoskinson trying to make peace with us, which as a man of God who's learned in life to not hold resentments or grudges against people and to understand that humans are flawed, I forgive him. He was certainly cruel and rude to the XRP community, but for those who wanted him to get what was coming to him and for him to have a change of heart, he's had it. You can continue to hold your grudge for whatever you want, but he's now dealing with all the consequences that many of you probably wished on him. He's got it now. I'm not sure what more you could really want from somebody who has to now go through the whole pain. Karma got him. Now he's turning a leaf. For that, I forgive him. And for those who need it, here, I'll give you this. It's a 50 second clip here from Charles Hoskinson. It may be the best you get from him, but here you go from the horse's mouth.
But, I want XRP to win. I think it's good for all of us. I think they will. I think it has a potential going all the way up to the Supreme Court. And we'll just see what happens we'll just try to move in that direction. Just hang in there. And I'm sorry you guys have gone through hell. It is horrible to spend 29 months fighting and $200 million fighting to get to a point where even if you win, you don't get anything because you don't get the money back, and you don't get the lost time back, and you don't get the competition back. It's like somebody who's wrongfully convicted. They sit in prison for a few years. They don't get the time back. And there's that stigma and all that trauma from all of it. And I can see the trauma in the XRP community. I feel it. It's tough.
So good job to the Bearable Bull for getting Charles Hoskinson to be able to say that. But now we got to move forward, right? So we know we're kind of in a similar spot to where we were with C19. We know we've got a catalyst. We can see there has been some type of reactionary support that has shown up in these last couple of days after the climatic action that happened in the middle of the night, at least, Friday night into Saturday morning here in the United States, at least. We've seen that there on many of these coins that were deemed securities, such as Cardano, Atom or Cosmos, Solana, and Matic. And we've spent a lot of time talking about the trading range that we've been in for a lot of these assets for over a year at this point, most of them entering in here in May of last year. And we've been talking about Wyckoff accumulation schematics. We've been talking about last points of supports. We've been talking about springs, referencing to the different types of schematics that there are. And we could see pretty clear as day happening in here, even for things like Cosmos and for Cardano, that creek that is showing up here, followed by spring phase happening in here. Now, of course, the scary part with this and the gamble everybody's got to take on these assets that have been labeled by a security by the SEC is that, will the courts come out and say, you can't just sit there and blindly throw it out there and say everything's a security. I mean, you could just go out there and say, hey, silver is a security. Hey, PlayStation controllers are a security because people buy them, or old school Nintendo 64s. Or collectible coins. They're all securities because you buy them and there's secondary markets where you can sell them. And if they were able to just freely throw around that term all they want and everybody had to comply, would that be the way of life? So having to take that gamble on it, well, they haven't gone through any type of court system to do this. They just blatantly called it without having any type of evidence or supporting documentation to say why these are. And no court has ruled that, as the SEC clearly states that the SEC cannot deem if something is actually a security. It is the court that makes that decision on whether or not it is. So they're just blindly throwing around accusations because
we don't need more digital currency. We already have digital currency. It's called the US dollar.
And so taking that gamble on, are these things going to be okay? Because you look at things like Cardano, you look at things like Cosmos, those are two ecosystems that have developer growth. Their ecosystems are actually growing, unlike things like Solana, where their development has been shrinking. Things like Algorand, their development has been shrinking. Will these things recover? And for an example, that when the SEC went after Ripple and then declared that XRP was a security, these were the preceding 8 days afterwards. We'll count these out. They file the suit here. Brad announces it, and then our bottom comes in 8 days later. We still, to this date, have not seen prices as low as they were after the SEC declared XRP was a security. It was the ultimate buy time. It was like the fear and the FUD couldn't get any worse. Like for things like Solana, Cardano, Polygon, Matic. Right? Last week, they got announced that Robinhood's going to be removing them. XRP. We were removed from every exchange in the United States except for Uphold and Bitrue. And there was even a Grayscale XRP trust, and they just straight up dumped the whole thing. It was definitely a dark time, but ultimately was the bottom. So you think about things that Cosmos has gone through, right? Cosmos has gone through Luna, Three Arrows Capital, Celsius, FTX, the SEC, and that trading range still continues to remain there. One of the harder things about these trading ranges and these Wyckoff accumulations is that you look to these and you say to yourself, the trading range just broke. Oh no, it has broken down. But it's totally just a trap. And then alternatively, you go back to moments like this and you say, okay, well, are we in a trading range right now? See, it's just dipping. This is just a trap. We're good. Let's go. But no, it wasn't. It kept going, right? But ultimately, Bitcoin has flashed all these bottom signals. The length of time spent in this particular region for so much of the market has still been holding, including the altcoin market cap and the total market cap holding these levels. There's never historically been a time period where the altcoin market holds a low this long and it breaks down further. It just has never happened. They've always held. There's just never been a time where the trading range breaks down after this long. The longest period that the altcoin market has ever held a level and then broke was 128 days. But otherwise, we're at 360 now, which sure is starting to look awfully familiar to this whole time period back in here. Which you kind of take a look at that time period from back in there to see what that kind of looked like in here. A lot of similarities, right? But even that floor back there still remained and continued to hold to ultimately lead to insanity happening in the market. And interesting thing about that moment in time is this is like we talked about with Ethereum. And if Ethereum's in a super cycle, we won't dive into that today, but that was this moment. That was the next leg up for Ethereum into the crazy stuff where it goes from like $1 to 300. But this is where we were at. You could see the similar behaviors happening in here all throughout, then being in spring phase of Wyckoff accumulation until finally sign of strength breakout. So as for me, I'm treating this moment as if that's what it is. We are in spring, and this is going to be my last time period of being able to accumulate the coins that I want. So I'm going through these things with a fine-tooth comb, having to really contemplate on these ones like Atom and contemplate on these ones like Cardano and the sketchiness and the riskiness at this point with the SEC, and having to lean more on, hey, you know what? There's a developing ecosystem in here. This chart and this structure is what it's supposed to be, but also knowing there's that overhanging narrative right now that is trying to scare me. And it's a pretty legit narrative saying, don't buy, don't touch. But I put on my tinfoil hat, and I talk about all the time, I have to have these 4 different qualities, and I've got to keep them really balanced within myself. I've got to be 25% grounded in reality, 25% conspiracy theorist, 25% smart, and 25% stupid. Because in the moments where you're wanting to do things, in the moments where the charts are telling you it's time to do something, there may be a totally other reason on why you shouldn't do it. And you have to kind of tap into that stupid, tap into that conspiracy theorist, because I think we all know that just tapping into smartness and logical thinking and, hey, Elon Musk just bought a bunch of Bitcoin, it must mean it's definitely going to the moon from here, doesn't mean it's going to go to the moon, even though your logic would tell you it's going to. Instead, tapping in your conspiracy theorists and your stupidity, saying, you know what, I think this is actually just a plan to distribute on retail investors. And it was. Or that the trend in the stock market will never stop until the Fed halts its hiking cycle, which absolutely nobody believed that we were going to bounce back into retracement levels once again, even if the Fed didn't stop hiking. But logic and thinking, I'm smarter than everybody else. Fed raises rates, markets must go down. Well, they've definitely bounced back up without the Fed stopping. So I have to tap into that, not knowing if that's right, but leaning on, these are the things that I look at. These are the things I focus on my channel. If you need someone to really preach a narrative and tell you all those risks of what it means with the SEC and what all those things are going to do, there's plenty of other semi-amateur professional, I play this role on YouTube channels that will help you with that. I won't know. But when I go based off these things, this is what I'm going to pay attention to. Because if this is right, then it's potentially the last chance to get the things that I want. And that we're in that spring, we're in that ending here. Definitely not having the expectation that we're popping out of here tomorrow, and that we're in the spring phase. And as described in Wyckoff Accumulation of Spring, straight here from stockcharts.com, springs usually occur late within a trading range and allow the stock's dominant players to make a definitive test of available supply before a markup campaign unfolds. A spring takes price below the low of the trading range and then reverses to close within the trading range. This action allows large interests to mislead the public about the future trend direction and to acquire additional shares at bargain prices. A terminal shakeout at the end of an accumulation trading range is like a spring on steroids. Shakeouts may also occur once a price advance has started with rapid downward movement intended to induce retail traders and investors in long positions to sell their shares to large operators. However, springs and terminal shakeouts are not required elements. See Accumulation Schematic 1, which depicts a spring, while Accumulation Schematic 2 shows a trading range without a spring, which is what we've talked about, having a last point of support or a spring. But that this action allows large interests to mislead the public about the future trend direction and to acquire additional shares at bargain prices, intended to induce retail traders and investors in long positions to sell their shares to large operators. And that's what happens in a spring phase and the psychological description of a spring phase. And that is the way I'm treating this. So there you have it. All right, that's going to be it for this one, guys. I hope that you're having a good start to your week. We've got a super busy week going on this week with all the news that's going on, and I'll be here for every step of the way. So, all right, I hope that you had a great weekend. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.